some of the sectors are really linked with the global setup, and indeed there's a big event that we all have our eyes on, and that is the FOMC outcome. But before that, what we are seeing in the commodity space as well, apart from equities, there's a lot of action building up. And one such sector is indeed the metal counters. If we talk about the metal stocks, then they are seeing some bit of a jump up, whether it's because of the demand recovery or there's some price recovery that is being seen. Let's get in more detail in this, and that's the topic that we're going to put the spotlight on in the Buy Now, Sell Now lens. And to get more insights on the metal space, let's go to Ashesha, who is joining us to give us some more details and highlights from the same. Ashesha.
Well, absolutely, Srishti. First up, let's talk about non-ferrous industrial metals. If you look at 2024 moves, they touched their highs in the month of May, and since then, most of these non-ferrous metals have corrected a whole lot. So, for instance, aluminium prices are down nearly 7.5% since their recent high in the month of May. Copper prices are down 18%. We have zinc, nickel, and lead prices down 7 and 33% respectively. So, that's the kind of fall that we have seen since their recent highs. Remember, China, the world's biggest consumer of most industrial metals, has been facing growth concerns, and there were growth concerns not only in China but globally, and this led to the fall in commodities. Apart from this, also remember, off late we have seen that surge come in, and the big question now is, are commodities rebounding? Remember, from the lows that we saw on the 9th of September, in the last 10 days or so, industrial metals have again seen an uptick. So for instance, aluminium prices have risen nearly 8% from their September 9th lows. We have copper, which is up 4.5%, zinc is up 8%, we have lead and nickel, which is up nearly 1.5 to 5%. So big question, of course, is the tide turning, and perhaps the trend is expected to continue. Let's also talk about ferrous space then. Steel prices, they hit their 2024 highs in the month of January this year, and since then we have not seen any recovery. So let's talk about steel HRC prices, which remember touched January highs of $825 per ton, and since then they have been on a declining trend. Currently they trade at about $620 per ton. So we have seen a decline of about 25% since January this year. As far as iron ore is concerned, that also continues to be on a declining trend. Remember, iron ore prices fell below that $90 per ton mark some days ago. And let's also have a look at what brokerages are making of the moves that we are seeing in commodity market. We have Bank of America Securities, which has come out with a note. First up, they talk about copper, where they are very bullish. In fact, copper currently on LME trades at about $9,200 per ton, and they expect the trend to continue, and that perhaps it could touch $10,750 per ton by next year. On the flip side though, as far as iron ore prices are concerned, they are not very bullish. They believe that the real estate recovery in China is expected to take longer than expected, and hence on iron ore they continue to remain bearish. So yes, for now looks like the tide is turning, and we have seen some bit of recovery both on the ferrous and non-ferrous side from September 9 lows.
Thank you so much for that, Ashesha, for outlining what exactly is happening in the metal space, because remember that we saw metal along with actually the commodities, or rather crude, actually seeing a downtick. Now you're seeing some bounce back coming in the metal space actually from the September lows. But what does it mean for the space, given the fact that a lot depends on the way how the commodity moves globally? First, before we take this question out to our experts, let's hear out what Nikunj Dalmia, who's the editor-in-chief of ET Now and ET Now Swadesh, had to say on the entire space.
The reason why we are talking about metal this morning is that because if I look at crude as the canary in a coal mine, which is indicating which way the demand scenario of the setup is moving, then crude has managed to bounce back. If the technical indicators, which is DXY and other factors, are on your side, and if in a sense the market will get excited if Fed is going to cut rates, then basic risk on trade will start again. Typically, a rate cut coincides with weakness in dollar index, and that's also coincides with rally in emerging markets, which has happened, and strength in metals coming back. Strength in metals and commodities has not played out so far, but I would make a case that there is case for a subtle and case for a short-term outperformance, at least in some of the base metal prices. So last week, if we were speaking about last 2 weeks, we've been talking about financials and NBFCs as a trade. I think bounce in metal, not a big, not a big rise, but a bounce stroke, dinky rally in metals is something which cannot be ruled out, which I think will translate into some of the metal stocks. Let's look at some intradays here. Vedanta, Tata Steel, JSW, JSPL, all the intradays here. And in a sense, we can establish the fact that yesterday we did see volume action and price action kicking back again in some of the metal stocks. Let's look at it. See Tata Steel, it has stabilized. Again, you look at JSW. All these stocks, in a sense, are showing signs that either they bottomed out or they're getting ready to really piggy bank on what could happen to global metal prices.
All right, so that was Nikunj Dalmia sharing his take on the metal space, and he did say that a bounce in the metal stocks cannot be ruled out at this point in time, and that's what we have seen happening in the recent while as well. But what our experts share their views on this one, let's get in more details, and for this we are being joined by two of our very special guests. Rajesh Agarwal, who is the head of research at AUM Capital, is joining us today on the fundamental side, as well as Hemen Kapadia on the technical front is also with us. A very good morning, gentlemen, and thank you so much for your time. Hemen, firstly, let me come to you to have your take on any of the metal stock that stands out for you at this price point, because Nikunj sir was just highlighting and trying to put the whole picture in context that if the Fed cuts the rate, what could happen to the dollar index and what could be the likely impact on metals as well as the emerging markets. What's your take on the metal stocks specifically? Are they in for a little bounce on the technical front as well?
A very good morning to you, Shishti. A very good morning to you, Sharon. Thank you for having me on the show. I think it's going to be slightly more than a bounce, Shishti, the way I see it. The metal stocks have been correcting for multiple months now. So I believe they are setting up the stage for, yes, currently it's going to be probably a bounce, but I feel it can convert into a rally also. Hindalco, 610 to 750, Shishti, and this has been going on for 5 months. This is the 5th month. Vedanta, same story. Tata Steel oversold. JSW leading the market will post a new high. So frankly speaking, all of them looking interesting. You can cherry pick which one you want, but if you take a slightly 2-3 month point of view, I think Hindalco and Vedanta have the capacity to surprise on the upside.
Right, a very good morning to you, Hemen. That's your view coming in the metal space. Rajesh, what's your take coming in on the metal space, especially the metal counters? How should one actually look at these names, and especially when you talk about strategy, if you're investing in them fundamentally, because a lot depends what exactly happens globally as well. So how can one actually make the right choice while investing in these companies?
Good morning, Sharil. Good morning, Srishti. Good morning, Hemen. You said it right. It's very difficult to take what is the right choice in selecting the counters. But let's talk about the industry first. What has happened in the recent past? Metals have been gaining some kind of strength in the recent past just because of the fact that people have started anticipating a rate cut by Fed and China, which is going to give a boost to their consumption in China, and lower takes on dollar index, as Nikunj pointed out. So these two factors are giving boost to the metal stocks as such at this point of time. And not to forget that in India, there have been duty cuts. The anti-dumping duties has been applied on steel imports from China and Vietnam. So these things are certainly a boost, and not to forget the kind of capex that has been announced not only by private players but even PSU side, government side, and the focus of government on infrastructure plus the real estate boom which we are witnessing in the country. So all these things point to a better future for metal stocks going forward. At this point of time, I think one of the major reasons for going for steel stocks would be the iron ore price, which has gone below $90 which is a major raw material for steel stocks. So in the entire space, we would like to recommend Jindal Steel and Power, which is not only doing very well on its Raigad plant. Angul plant has been ramped up. It's the largest coal-based sponge iron plant in India, making long rails. And the company's focus has been entirely on reducing its debt. So I think despite the fact that Jindal Steel has run up quite a lot in the last 1 year or so, still there is much of a steam left.
Right, so that's the take coming in from both of our experts, and both seem to be bullish on the metal space at this point in time, and they also shared their top bets from the same sector.
If you like this video, then like, share and subscribe to ET Now.